I know this is probably a hard question for you, but if you had to pick like one lesson or one key concept that you really like to teach people, what would that be?
Are you talking about in terms of psychology or in terms of trading in general?
Trading in general. So anything that comes to your mind.
Discipline, discipline. Because first of all, the way I approach markets, and I would highly recommend everybody else do it, um, is to find an idea, but it has to be an idea that can be tested. So it can't be Elliott wave because nobody knows. You can't back test it. So something like Donchian systems, like channel breakouts, you can back test them. Do they work? Do they not work? So test, back test. Once you've done that, now you have a proven system. Now all it takes is the discipline to follow that system, right? Just follow it religiously, no matter, I don't care what you think, I don't care what your brother-in-law thinks, just follow it, discipline. Because now the system is accountable, it's provable, it can be adapted, but you have to have the discipline to follow.
Speaking of adapting your system, how would you make your system better? Let's say you test something and it doesn't work as good as expected, and the result like close to 50-50. How would you make it better? What would you look at?
It depends on what the problem is. Um, I look at most systems, and basically a system type trader. All my entries and exits, or 99% of them, come because of a system. Okay, like it crosses this, I buy. Okay, it depends on what the problem is. So, for example, one of the things I do with my coaching customers, for example, is that they'll go and they'll do a back test, but every month we go through their actual trading performance. So you start to learn certain statistics. So the two basic statistics are what's my percent reliability? In other words, what percentage of my trades are winners to losers? And then the second one is what's the ratio of my average winning trade to my average losing trade? And then there's other statistics as well, largest drawdown, et cetera, et cetera. Okay, largest string of losers. So you look at that and you start to say, well, if I'm making money on 55% of my trades and my average winner and my average loser are the same size, I got an edge in the market, but it's not a big edge. So now you have to attack, how do I make those one or both of those statistics better? Well, generally speaking, if I can stay in the trade longer, my ratio of average winner to average loser will get bigger. Okay, that's why position trade systems, the average winner's got to be 2-3 times bigger than the average loser. A short term, a day trade or swing trade, you're going to have 50-50, 55, 45, 60-40 reliability. But if I can get my average winner from 1 equal to 1.2 or 1.5 times my average loser, then I have a big edge in the market. Do you see what I'm saying? So you have to start to attack, and there's different techniques to attack each of those statistics.
So it's really about like pinpointing the thing you want to work on or improve, and then finding out things around that.
Correct.
And once you do this, what would you do? Would you look at like ways to make it better based on your actual trading data, or would you kind of do a new backtest of these new parameters to figure out what's the best thing to do?
Whatever you've got. Obviously, your own personal trading would be the best data because it's your data and it has to do with how you approach the market. But a lot of people, particularly if they're starting out, they can't do that. So they have to back test.
Mm-hmm.
Let me give you an example. A student came to me with a technique. It was profitable. Um, uh, not wildly profitable, but it was profitable. And so I said, well, okay, one of the things you can do is add a trend filter. So in other words, I'm only going to take, he was taking buys and sells. From now on, I'm only going to take buys if like the 10-day moving average is going up. Okay, so now there's a trend filter. Well, it dramatically improves the profitability. Because if you trade in the direction of the trend, your ratio of the size of your average loss to, I'm sorry, the ratio of your average win to your average loss is always going to go up if you're trading only in the direction of the trend. Now, you may end up actually making less money because you're cutting out half your trades, but nonetheless, you're going to be psychologically a lot better off because your average winner is much bigger than your average loser, and your percentage of winners to losers will go up too if you put in a trend filter. And most techniques work better if you add a trend filter to them.
Funny you mentioned this because I found, at least for me, that like the way I improve my result is by removing trades, like not adding trades. Some people would like you add more trades, trade more things, but for me it's like reducing the number of trades by trading less pairs, some filters, less time frame, things of the sort.
That's correct. Usually reducing. I always tell people that I work very hard at not trading, not trying to find trades, but trying to not do trades. Talk myself out of trades rather than talk myself into trades.